All right. Hello, I'm Levis Rodriguez, and I'm making this video today to review some trades I took the past couple days and to go over how to truly fill your orders, how to get orders filled, and I will be talking about that feature on Robinhood, about that high and low probability of order getting filled through a model they use, and I'm gonna talk about how a model is not necessary and that feature isn't true to how it's really like how it's not necessary. And yeah, so I'm just gonna go into this right now. So yesterday there was a Federal Reserve meeting, and I got up around 9, and I saw that this demand was formed intraday, and that's really what I was looking for going into the meeting. Yeah, the meeting was at like 11:30, 11. So the Federal Reserve Committee talked first, I believe, and then Jerome Powell spoke after. So after they talk, there's usually like some volatility and some huge imbalances. So I decided to wait and enter around here, this area where price has been touching. So I got in. After the first meeting would happen, I let the price drop into this demand, and I got in. And then 30 minutes after, Jerome Powell spoke, and then yeah, so it came back, and after it came back to my demand zone again, I wanted to add more. I wanted to add actually. I wanted to go into a QQQ position because I was in some SPY calls at that demand, and I had drawn 2 demand zones for SPY and QQQ. Just trying to find it right here. So I just drew this box today, but yesterday it was like this. So yeah, I came in here, and today's my first day of trading with my real money. So I decided to take it slow. I was like, it's okay. I'm just gonna follow my plan, go with my SPY calls, and yeah, it worked out. I got the contracts at like $2.40 around there. And my bad, let me just try to fix this real quick. Yeah, I entered at 395.70 around there, and then I exited at 398 around up here. I got a good 15% on the contracts, but something I really want to take a note of and work on is identifying those significant supply imbalances, because this was a supply imbalance earlier from a couple days ago, I believe. I'm trying to find it. No, oh, actually, it was from June 10th. Actually, I'm tripping. So yeah, created some supply. Oh wait, I'm sorry, my bad. That was a mistake. Yeah, so I was aiming around here. Yeah, yeah. I was I correcting myself actually. So it created. There was some supply here. I mean, it was kind of from this area. So when price came back to this area, the thing about these old supply imbalances is that it's not going to be used. Um, what I've learned is that it already did what it had to do, which is create demand down here. This is a fair value area, and this whole thing right here, this whole dip, decrease in price, and the way it came back up, this is all a wholesale price for the S&P 500, because this is where there's competition to buy, and the evidence of that is how price reacted when it came back right here on Tuesday, I believe. How it came back and spent little time here and just shot up right away. So I do expect when price comes back here, I would definitely um, definitely be on the lookout for that myself. So, given the context of that, um, I used 398 as my price target, and there was a high probability of it going higher after that because of what I just said. And after I exited, I think uh, I made around $100, 100 something, and yeah, so I just watched the market continue up the whole day. Um, yeah, that's just something I want to work on for myself. And today, the trade I took today. So today, actually, I woke up a little late again. I woke up around like 7 or 8, and the market had, it had come down. Um, I didn't really see this as a significant supply again because of that reason. So I wanted to do a call here, but I really wasn't confident in the trade. But um, but when I thought about it, I thought, okay, in this area right here, I don't know if you've ever used Bookmap, but when you see um, those large red areas, those large areas of liquidity, that's really what it is. Um, that's what's happening here. That's all that happens in these green candles. Because after this moves happen, price moves so fast, those buy orders are not going to get filled. So when it comes back here, it's spending all its time here to create to no to fill those buy orders for that demand to be met. And here it's just increasing demand, excess demand, and um, price increased and created some balance here. And the trade I took was a today was not a really good trade at all. It was a forced trade because I tried shorting the S&P right here at 404 because I thought like, okay, let's maybe create some supply, blah blah. It was really forced. So I got in. I didn't lose money. I actually like got out around this job right here, and and I just thought like, you know what, it doesn't make sense because price already used that supply imbalance for it to come back down and create demand, those wholesale prices. Um, so there should be a large move, but it had already met this demand from yesterday. So I didn't want to trade it anymore, and I was like, it's fine. I don't want to do calls. It's already too late. The risk reward isn't really there for me intraday. So I exited, and I didn't lose money. Luckily, it was just a good learning lesson for me today. And yeah, the market continued higher, and then Apple and Amazon. I think Apple did really good on earnings, and I didn't check Amazon, but I think they skyrocketed after as well. So yeah, that's my trade from today. And something I want to go over is how to get your buy and sell orders filled. And that model that Robinhood uses, apparently they have a model which I guess um, apparently you could. It's a high probability, but high fill likelihood. There you go. That's what it is. So this is what I saw yesterday or a couple of days ago on Robinhood. And I've never seen it before. And I look at it, I'm like, wow, that's just insane. Like they're really brainwashing investors. Like they're making it seem like getting your order filled is like some gamble or something. Like it's some like oh, we don't know if it's gonna get filled. We don't know. It's but here with our model, I clicked the about it, like the description of it. And it was like, oh, we use a model, blah blah. You don't need a model. It's all this. All you do is I can't really show you right now. But if you go to paper trading and you decide to do a put, you want to do a put. You want to go to the 1 minute time frame and do a put when there's a green candle like this, right? There's a green candle. That's how your order is gonna get filled. And when you want to do a buy order, like for example, yesterday the trade I took, as soon as I entered my order, I got filled because I did it on a red candle because the market's moving really fast, and if you're deciding to go long, you want the market to come down to fill it out, and when you want to go short, you want the market to come up to fill it out. Okay, this is really annoying me. My bad. So went to the 1 minute time frame on my yesterday's trade, and I got on these red candles right here. This is the only time like candles really matter, like the color of them, because um, when you want to buy, you want to get on the red one, and when you want to sell, get on the green one. So I got in here, got it as soon as this candle formed right here, because it was red. So I'm like, okay, let me do it right now, and then boom, got it, and it got filled, and then I sold at this my price target up here on a green candle because that's how the order gets filled for the selling side of it, which I'll go over another time. But that's how to get your orders filled when you want to add to your position, add to a position or create a one or whatever. So yeah, that's pretty much it. And oh, also I wanted to go over um, the a lack of supply and demand, which is where is it? Oh, it's on the QQQ. Um, QQ. Okay, okay. So the way I've been trading the what's it called? Let me see if I can invert this real quick. Dang it. Okay, whatever. I don't know how to do it right now. I'll probably find it later. But basically, because the market has excess, increasing demand, right, off these buy orders, that I'm guessing there's a really significant amount of buy orders because of how price reacted and came up $7 per share, right? You could tell from yesterday. So this area right here did act as supply, temporary supply, but it came back to fill these orders down here. So you can see this area balanced out intraday, right here stalled out, came down, and then what's happening here is that I've heard that the way a strong imbalance zone of strong zone is how it reacts. Well, you don't know how it's gonna react, right? The first time it happens. So it came up. You would think like, oh, this is probably a strong supply zone. I'm gonna short. It would have worked out in your favor, but the market is at a fair value of for wholesale prices. So um, all this doing right here is the opposite of down here. But in this case, demand exceeded supply, and this filled out a bunch of sell orders right here. This area. This is a balanced area too. Right here. This is a balanced area. So one big thing I've learned is that you want to let price leave the middle. When it leaves the middle, because all price does is just come back to the middle, and or go past the middle. So here, because of the excess buy orders that were from yesterday and today from this area, it's time spent less. There was less spent time here than there was here, because again, this area all I did was fill out a bunch of sell orders for it to match these buyers that were left unfilled here, for it to continue higher. And again, you could get an easy fill, a super easy fill if I would have gotten some calls right before it happened, right before it went to my demand zone. And yeah, so that's what I wanted to go over today.